Hello, friends. We got some big news out there when it comes to financial markets. As I told you, I wasn't sure what was going to happen on Monday with the markets. I said it could go down, or then again, it might just choose not to, even though the United States lost its debt perfect rating score, which is really big news. But as I kind of got the inkling, I thought maybe the markets may just not care at all. But friends, it doesn't mean that it doesn't matter. In fact, it matters absolutely a lot. When we start looking at what happened yesterday on Monday in the markets, there's some pretty serious things happening right now. And this really is very foreboding. While it seems calm on the surface, there's a lot moving underneath. I want to give you kind of a bit of the down low on that because I'm concerned. I'm concerned for a lot of you guys out there. If you're in the markets, these are things you need to be aware of. All right, let's jump right into it. Welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade, and these are the things the mainstream media just won't tell you. All right, so what's the gist of this? The biggest thing out there, we got a lot of problems happening, and we'll go through a bunch of those. But the big thing here that we saw yesterday was who did the buying. Moody's downgraded the United States debt on Friday. So now all three credit rating agencies have the United States debt for the federal government below perfect. And it's been perfect since like forever. Well, they finally downgraded. All three agencies have now downgraded it. That means that it's signaling to the market that they should be charging higher interest on U.S. debt because it's not as stable as it used to be. The chances of you getting defaulted on and not getting your money back from the U.S. government is increasing. And there should be a higher premium on that. I mean, you shouldn't be loaning the federal government money for 20 years. Like, that is just really not a smart move right now. I think that most of us would kind of agree that that's probably not a smart move. Now, we got some great things happening with Doge. We got great things happening with the Trump administration. But the deficit isn't going away, not at least in the near term. And so if the deficit's not going away, so we're still spending more than what we're bringing in tax-wise, the debt's going to continue to get bigger. And as it continues to get bigger, it becomes the interest rates keep going up. At some point, the interest expense becomes bigger than the entire income of the United States, and then it's over, right? We already are paying more on interest than we are on national defense, and that should be a wake-up call to you. The federal government is paying more on interest than on national defense. The entire U.S. military costs less money to run than the interest payments on our massive ball of debt. All right, so yesterday, the banks, the hedge funds, all the insiders were dumping their stocks. They're like, this is not good. This is bad. This is getting us closer to the edge there. Maybe it's not the end of the world, but it's definitely really bad news. So as the markets opened down, in comes the mom and pops, the uncles, all the people like you and I, retail, as we were called. They opened up their little brokerage accounts and they said, oh, look, the stock market is down. Let's buy while it's cheap. And so they all bought the dip. Now, you may have been one of those people buying the dip. So the banks, the hedge funds, all the insiders, the Nancy Pelosi's of the financial world were dumping stocks. They're selling. And who was buying? A bunch of yokels, a bunch of unconnected people who just have been trained that when the market goes down to buy so that when it goes back up, you can sell it at a higher rate. It's worked out pretty well so far. That assumes an expanding U.S. economy, which is really that's quite an assumption these days. And then the thing is that, who do you want to bet on? When all the smart insiders, the Nancy Pelosi's of the financial world, are selling the stocks because they're like, this is not good. And then you got all the mom and pop traders, all the teenagers drinking energy drinks, who are gambling on the stock market, they're all buying. History kind of shows that the banks and the hedge funds may not be always right at first, but they usually are right in the end. Heck, they're the ones who make all the money. In fact, they have so much money, they can kind of make things go the way they want them to go. So when they bet a certain way, it's usually not a good idea to be betting against them, because the people in the Federal Reserve who move markets, well, they're populated by the same people that run the banks. They're all interconnected, okay? So that should be a grave warning right there. The banks are like, it should go down. And normies were like, no, it should go up. Well, friends, the banks have a tendency to get the last laugh. So I'm kind of watching what the market's doing a little bit today. But I want to drop this video out there for you guys. It looks like things are still kind of steady today, but I'm warning you that there's stuff moving underneath the surface. One of the things that the professionals are looking at today is Japan national bonds, the Japanese government bonds, like the U.S. Treasury bills for the U.S. government, but for Japan. Japan is... they're basically what the United States will be in the future. That's how their economy is. Over half of the Japanese stock market is owned by the Japanese National Bank. That's kind of how bad things are, okay? They've bought the dip so much that they actually own half the Japanese stock market. So half of all of the companies in Japan are owned by their equivalent of the Federal Reserve, which is, sure sounds like socialism to me. I don't know. All right, so the Japanese bonds are absolutely cratering, which means their interest rate on their debt is exploding upwards. So this economy that basically really created the whole monetary money theory, this idea that you can just print money and it won't ever have any consequences. And Japan has been doing it for quite a while. And so far, the results have been not so bad. Well, it's starting to look like they're getting theirs right now. They're losing control of the interest rates on their government debt, and they're buying like furiously, but it doesn't seem to be enough. And then on top of that, everyone who's invested in the bonds, I mean, their value is crashing. And their national bank has bought a lot of those bonds. They're losing billions and billions and trillions of dollars probably. They had their worst auction since 1987 for government debt. That's how bad things are. Nobody wants to touch these bills. Nobody wants to buy them. The only people buying them are the government entities themselves. The only person funding the Japanese government is the Japanese government. That should be kind of a scary thought, because if you think about that, it doesn't make any sense, right? I mean, it's like pulling yourself up by your own bootstraps, and physics doesn't work like that. Well, money doesn't work that way either. If you just start printing money to pay your debts, that's kind of how the Weimar Republic went. So that's the situation Japan is in today. They're blowing up over there, and the United States is just kind of ho-hum. Nothing's changing. Nothing's different here. Everything's fine. Well, it's not fine. Japan affects the United States, and not only does Japan affect the United States, China affects the United States. And while China kind of bounced back once they got the tariff relief, their stocks are kind of going back down again. And it's got the Chinese government kind of freaking out. It's got Chinese investors freaking out. And it's got all the banks in the world that have invested trillions and trillions of dollars into the Chinese infrastructure, given that money to China. They're realizing, some for the first time, that they're probably not going to get their money back. And this is really scary for them, because this is an existential threat. They've banked on the idea that China is definitely going to pay them back, just like everyone's banked on the United States federal government is definitely going to pay them back too. There's all these things in the world markets today that don't make any sense when you think about them logically. But at the same time, they are held by the banks and all the insiders as like absolutely beyond the pale, definitely true. Well, the insiders are starting to scratch their chins and scratch their heads and going, well, maybe that's not as true as we thought it was. And they're starting to take a little bit of a step back. And by a little bit of a step back, I'm talking about hundreds of billions of dollars back. And retail people are the ones stepping in and grabbing a hold of the bag. You ever heard of a bag holder? It's the person who buys at the very top, and when all the selling starts, they're the ones stuck. They're the ones stuck as the stock craters or the stock market crashes. They're called bag holders. They're the ones who get sold to right at the top. And, it's like hot potato. The person that gets tossed the potato at the very end, or the person at the end of musical chairs that's left standing, that's the bag holder. And you don't want to be that person when it comes to the stock market. You don't want to be the person holding the stock when it starts going vertical in a downward direction. So, our economy, the United States economy, is rolling over. United States debt is getting worse at a slightly reduced rate. The idea that President Trump is going to balance the budget is absurd. He even said he's not trying to do that. He's trying to cut enough off the federal budget that the growing economy can take care of the rest. He's not trying to balance the budget. He knows that's impossible, can't be done. And so you should kind of take his word for it. Elon Musk, as well as Donald Trump, are like, they're trying to cut $1 trillion off the budget. And since we had a $2 trillion deficit last year, they're trying to go from $2 trillion deficit down to a $1 trillion deficit. So we're only adding $1 trillion to the national debt every year, which is still a lot of money. That's the GDP of Saudi Arabia. The country that's out there building cities in the desert. They seem to have all this money in the world. They have a $1 trillion economy per year, and we're spending about basically the entire Saudi Arabian economy every year. We're borrowing it and just tossing it on top of our national debt. So our national debt is getting worse at hopefully a slightly reduced rate, but it's still not going to ever get paid back. The Federal Reserve is not helping one lick. Even though we have these tariffs, we got the trade war, and we got a looming real war. Yeah, Iran made some good noises about wanting peace and being willing to give up their nuclear program. They're now absolutely backtracking on that. So they're saying that any deal that requires them to give up all of their nuclear fuel processing and enrichment is a non-starter, which is the only deal that the Trump administration is willing to accept. So what the Trump administration says is absolutely necessary, Iran is saying is absolutely off the table. So, is there going to be peace? Apparently not. And Israel over there is going ham on Gaza. They've just sent in basically the largest offensive we've seen in quite a while, land invasion into Gaza. And it's sounding like, reading between the lines here, that they're going to take territory from Gaza and they're not going to give it back, ever. So you can just imagine how popular that's going to be across the Middle East, which is about absolutely unpopular. It's going to be the most unpopular thing in the world ever in the Middle East. Middle Eastern Arab countries are going to lose their little minds. Okay, they've about had it with the Palestinians, but they still will side with the Muslims over the Israelis, okay? And Israel's going ham there. It's bad enough that J.D. Vance was flying to Israel and decided, I guess it was President Trump who made the call or whatever, and told J.D. Vance, do not go to Israel. And they just kind of diverted around Israel and did not go to Israel because President Trump is upset with Israel for doing this massive offensive and is telling Israel to pull back or else we're going to stop supporting you. You know it's pretty bad and it's pretty big when the United States and President Trump says, stop it or we won't support you anymore. Now, details are a little hard to come by right now because Israel is not talking about it, and the Palestinians don't really have many mouthpieces or media ways of getting information out. So we're all just kind of staring into a black hole and kind of wondering what's happening. But we're looking at the United States government who can actually see into that black box with satellites and all the communications and everything like that. The United States government knows what's going on, and President Trump doesn't like it one bit. And as pro-Israel as he is, he's not happy about it. Now, he may really not like that it's destabilizing the Middle East right now and making our Arab partners very unhappy, but that's very unlike Trump. President Trump has been very pro-Israel for a very long time, and for him to be thinking that this is not a great idea and not a good plan and it's over the top is all the more telling. All right, friends, with all that happening, is the stock market really the best place to be? I just want you to ask this simple question. What happens to the stock market if oil doubles in price? Because if there's a war with Iran, there's a good chance that oil will double in price. And I think that most traders would kind of think that, if oil doubled in price, the stock market probably wouldn't get cut in half, but it would lose at least 25-30%. With war on the table and that a distinct possibility, oil prices could be going through the roof very shortly. And where's the stock market going to go? And that's just one scenario. What happens if the banks start imploding? What happens if Japan starts imploding? What happens if any of the pigs start imploding? Portugal, Italy, Greece, Spain, the European governments that have overspent quite a bit and have huge national deficits. These countries could start imploding. If we have a debt crisis that starts spreading like a contagion, when the bond market starts deciding that debt is not okay anymore, the world is going to change very quickly and very badly. Just like when the world discovered that the mortgage securities, the subprime mortgage securities were not a really cool idea, and they were really just waiting to explode. That's basically what we could see, but not in mortgages, but in national debts, which is a bigger number, okay? National debts of the world governments are huge. And if we start seeing defaults there, well, if we start seeing fear of defaults, then that pushes the interest rate up, which forces defaults. It's coming our way. Be careful with the stock market, friends, because all the insiders seem to be thinking it's not a great place to be right now. All right, friends, that's the warning for today. If you want to check out another video from this channel, there's one right up here. Thanks so much for watching. Steve Poplar of the Poplar Report out.